Let's now solve question number 3B from our May 2025 examination. This question 3B is from the topic of Accounting Standard 25, Interim Financial Reporting. Standard which has been very recently introduced into CA Intermediate. And before this, there were no questions from this standard in the intermediate examination level. Anyways, let's start. Please see this. XY Limited reported profit before tax of 18 lakhs for third quarter. Very nice. Ending 31st December 2024. They are doing quarterly reporting. For the third quarter, how much profit have they reported? 18 lakhs. Following observations are noted. Now, when you're preparing quarterly reporting, any reporting for a period lesser than a year, interim period, very important point that you should notice, expenses incurred in that counting period, that interim period, should be booked in that period. Incomes earned during that interim period should be booked in that interim period. You can not defer, you cannot amortize it over longer than one interim period. You can do it only if you would have done it for 2 accounting years. If you would have done it for 2 accounting years, then you should do deferring or amortizing. If you would have not done it over 2 accounting years, then you should not do it for 2 interim periods also. If you would want a quick recap of this, please do watch this revision video on Accounting Standard 25, which covers the entire standards end to end and then help us understand when can it be deferred, when can it be amortized. For now, let's not worry about this. Let's come back to our question and also see our answer. So, what are the observations? Let's first write what is the net profit after tax, before tax. They've already reported 18 lakh. And first one, dividend income of rupees 8 lakh received during the quarter. Third quarter, we have received dividend of 8 lakh. So, this 8 lakh rupees, though it is earned over the entire year, because it is received in third quarter, it should be recognized as income in third quarter. Can I write little to first, little to second, little to fourth? No sharing, no carry. Right, 8 lakhs in third quarter. What have they done? They were recognized only to the extent of 2. What did they do remaining 6? They shared between 1, 2 and 4. Are they right? No, they are not right. They put entire 8 lakh as income. They put only 2 lakh. Balance 6. We will write. Shall we write it? Very good. Let me write here. Add dividend income not recognized. How much is not recognized? 6. I will recognize that 6 lakh. By recognizing this dividend income, my profit will increase. So I am adding it. Let me go to the next adjustment. Sales promotion expense. To promote my sales, I have incurred some expenditure like advertisement expenditure. 15 lakhs is incurred in third quarter. Entire 15 lakhs should be recorded in third quarter. Why? I have incurred 15 lakh in third quarter. What have I done? 70% has been deferred to fourth quarter. Yake? Because the sales are more in that quarter. It is not the sales which is high. It is the accountant who is high who did this. Just because sales are more in fourth quarter, you cannot defer your expense to fourth quarter. How much is the expense? 15 lakh. How much you should have written in third quarter? 15 lakhs. What have you done? You have deferred 70%. Do 70% of 15. 10 lakh 50,000 has been charged to fourth. Meaning you have recognized only 4 lakh 15 third quarter. 10 lakh 50 which is incurred and which is belonging to third quarter, which has been deferred to fourth, should be charged in third quarter. When I charge that, my profit will decrease. So I would write it as a less item. I've incurred 15 lakh, but I only charged 4 lakh 50. Balance 10 lakh 50, which is not charged. I will charge it now. I'll write here minus sales promotion expense not recognized in the past to be recognized now 10 lakh 50. Did everyone understand this? Very nice. This is 15 lakh into 80%. Come on, let's, sorry, 70%. Okay, let's go to next one. In the third quarter, company changed method of depreciation. Remember, change in the method of depreciation is change in accounting estimate. It should be given prospective effect or retrospective effect. Prospective effect. Who tells this? This is as per Accounting Standard 5. If in case you have doubt with regard to this, please do revise Accounting Standard 5 in detail. So here we have discussed it in large and I have told you the difference between what is change in accounting estimate and what is change in accounting policy. Clearly discussed in the past that depreciation is computed based on the cost of the asset, residual value and useful life. Residual value is an estimate, useful life is an estimate. Based on these two, when you compute depreciation, that is also an estimate. And the basis for charging depreciation is pattern of usage of the asset, As per AS10, pattern of usage is an accounting estimate. So based on that, whatever the method of depreciation that you would have computed will be an accounting estimate. Such change of depreciation method from WDV to SLM is change in estimate to be given what impact? Prospective impact or prospective effect. From now we would have to change. You don't have to change any previous period's expense. Okay, which resulted in excess depreciation of 4 lakh. 4 lakh should be completely charged to third quarter. How much should you charge to third quarter? Full 4 lakhs. What have they done? Entire amount has been debited to third quarter. Very good. Should we do some rectification? They've done the correct thing. Now they're telling, though share of third quarter is only 1 lakh. There are people who do it right and they think, oh my god, I've done wrong. These are the kind of people. Some people who do it wrong and they'll think, oh, correct. What's wrong? Full confident. But some people who done it right, they still have some amount of self-doubt. ತಪ್ಪು ಅನ್ಸುತ್ತೆ. Is it wrong? ತಪ್ಪು ಅಂತ ಅನ್ಕೊಳ್ಳೋದು ತಪ್ಪು. ಮಾಡಿರೋದು correct. Believe in yourself. Okay, 4 lakh is supposed to be charged. 4 lakh is correctly charged. Do we have to do any correction? Nothing. I'll give a note here. You can write this in the exam also whenever similar situation arises. Read this. Depreciation method changed is change in accounting estimate. It has to be given prospective effect. The treatment given in the question is correct and needs no adjustment. Everybody is clear? Let's go to next one. What do we have after that? 3 lakh extraordinary gain. As per AS5 extraordinary gain. Doesn't matter extraordinary or exceptional. That quarter you earn it, that quarter only you should record it. What have they done? Was allocated equally to third and fourth quarter. Is it right? No. They should have recorded it completely in third quarter. What have they done? The 3 lakh they have divided into 2. For half for third quarter, half for fourth quarter. 3 lakh by 2 is how much? They have recorded 1.5 in third quarter, which is correct. Another 1.5, we have recorded it in fourth, but actually it should be recorded in income or expense. It will increase the profit. They should have added 3 lakh. They have actually added only 1 lakh 50. So I will add that additional 1 lakh 50 here. Got this? I'll put this here. Is this better? Come to the next one. What do we have after this 1 lakh 50? Then cumulative loss resulting from change in method of inventory. Method of inventory valuation. FIFO to LIFO, LIFO to VAM. This method change is there, no? That is change in accounting policy. Same AS5 tells. Change in accounting policy should be given. Prospective or retrospective? Retrospective. From the past we should start changing. Because last year you had followed first in first out. This year you are following weighted average method. This year opening stock will be under FIFO. Closing stock will be under VAM. It will not sit good. So you have to change opening stock to VAM. When you have to change opening stock to VAM, previous year's closing stock should be changed to VAM. So it will impact the previous years also. Whenever there is change in accounting policy, it should be given what effect? Retrospective effect. So 5 lakh is the loss answer. Valuation was recognized in the third quarter of 5 lakhs. Out of this, 2 lakh relates to previous quarter. Now how much should they write? 2 lakh they should write to previous quarter. 3 lakh they should write to this quarter. What is the total loss for change in the change in inventory valuation method? 5. In the 2 should go to previous quarters, 3 should go to current quarter. They have charged full 5. We should add back 2 lakhs. Why? 2 lakh was supposed to be charged to previous quarters. 3 lakh was supposed to be charged to third quarter. I have charged 5. My profit has gone down. I will increase the profit by that wrong charge of expense. Add cumulative loss of previous quarters wrongly charged 2 lakh. Everybody got it? Let's see the last adjustment. I hope the last one. Yeah. Sale of investment in the first quarter. Investment is sold in first quarter. Profit or loss should be booked in first quarter. It has no impact on third quarter. What have they done? Resulted in a gain of 30. Don't take it in third quarter. Don't take it in third quarter. The company had apportioned it equally to the 4 quarters. 30 by 4. Looks like this accountant loves fractions. Everything is divided among everyone. Maybe this accountant was working in partnership firm before. He believes in sharing everything among everyone. 30 by 4 is how much? See, they should have recorded 30 lakhs as gain in first quarter. They have recorded 7.5 lakhs as gain in first quarter. 7.5 in second quarter. 7.5 in, we are doing accounting for third quarter. They've included 7.5 lakhs of gain. This should have not been included. So I will deduct 7.5 lakh here. 30 lakhs divided by 4. That's it. All the adjustments are done. Calculate the result of the third quarter as per AS25. Also comment on the company's view on each observation. We've told it. You can write a statement. Let me know how much is it. Rectified net profit before tax. 9 lakh 50. This, my friends, is answer for question 3B on AS25. Got it?